What's up, everyone? Today is Thursday, December, what is it, 11, 12, 13? I have no idea. So the reason why I want to do this recap, I usually do the recaps on Mondays. The reason why I want to do one today is because I felt the need to overtrade. I felt like I was about to break my rules. I felt like I was about to screw up. So to eliminate myself from the situation, I decided to do a recap video to get my mind right again, to get my process straight, because all it takes is one day to deviate for you to domino, and I don't want to fucking deviate because I'm on a massive, massive streak, and I want to do everything that I can to protect that. So before I start, a couple things I want to talk about. I want to talk about the free webinar that we have running. It is at myinvestingclub.co.co. This is kind of like a free 2-hour mentorship course for the brand new trader, for the trader that's not an MIC. Members have already seen this. You don't have to watch it. The way it works, it's limited seating every week. So you have to go to myinvestingclub.co, reserve your spot, and that's how you're going to have access. Number two is we are doing a holiday sale. You get to save 200 off of annual and save 1,000 off of lifetime. The sale ends December 31st. The link is in the description of the video. Prices are being raised after December. The monthly is going from $179 to $199. The annual is going from $1790 to $1990. Current members will be grandfathered in for life. So if you upgrade to annual for the 200 off, which is $1590, you'll be stuck in annual for $1590. You'll basically be paying $400 less every year than every single other person. So, sorry, I thought there was a car coming. Anyway, so let's talk about trading today, right? Let's talk about trading today. I've been on a really good streak lately. I posted it on Instagram, I think, and I posted it for the lifetime members. And I'm up 70 grand. Well, now it's like 71 or 72,000 in 28 days of trading the first hour only. And if you do the math, I'm pretty sure it comes down to only making $2,500 a day. And that's really not that difficult. And you don't have to be making $2,500 a day. Even if you make $250 a day, you'll still be making a great living trading. But the point of the matter is that I'm on a massive green streak. I'm a massive win streak. I'm sticking to my process. And this is the point that I'm trying to show everyone, is that every single day, as long as you stick to your process, there are going to be days that you make money. There are going to be days that you lose money. But if you follow your process overall, you will be green in this market. As you guys could tell, for the past 28 days, I haven't been doing anything different than what I've been doing 6 months ago, right? Think about it. What am I doing that's different? Nothing. I'm literally showing up to the market, looking for the low hangers, trying to attack them, cutting off my trading at 10:30, walking away and trying to stay busy. I'm doing this every single day, every single day. Sometimes it's going to lead to a massive streak like it is now, and other times it's not. And that's the point. That's the point that you guys have to realize. Yesterday I walked away with 50 bucks, right? 50 bucks, me, right? The guy that's made 100 grand in one day, the guy that's made 70 grand in one day, the guy that's made $1 million in a year. I walked away with 50 bucks yesterday. And why was that, right? Why was that? That was because that's what my process yielded to yesterday. Not all days are going to be massive, right? Not all days are going to be big. So if I'm just sticking to my process and there's going to be certain days that I only make 50 bucks, so be it. Because when I come and show up to the market today, I made 1,700 bucks. I made 1,800 bucks, whatever the hell it was. So it made it as if yesterday didn't matter. But if I screwed up yesterday, if I took a loss yesterday, if I was not okay with taking a small win yesterday, it would have clouded my judgment. It would have fucked me up today, and I would have been a loser today. I would have probably lost money because I would have too much FOMO, right? So a couple things that I want to talk about as well is that today was kind of a weird day. So let's kind of get into it, right? Let's get into it. You guys know my process. If you don't know my process, just fucking watch this week's video from 2 days ago. I don't want to repeat the same shit over again. Go watch it, you lazy fuck. But basically today, I was looking at CEI as a trade, a potential trade, MBOT as a potential trade, and those are low-hanging fruit. So in my video watch list today that I posted for the members, I mentioned that CEI, the reason why it tanked after hours is because the stock, the company released a PR that said that they had no idea why the stock was up. They released a PR saying that, oh, our stock is up. Okay, no problem, no big deal. Meanwhile, they have massive looming dilution, right? Massive looming dilution. It's all bullshit, dude. They know exactly why their stock is up, man. They know exactly why it's up. So when the market found out that there was no reason for the stock to be up, the stock went straight down, right? The stock went straight down. And to me, this was a perfect low-hanging fruit. I want the stock to bounce towards $2 in the morning, and I would be shorting a $2 level. And that doesn't mean that my order is at $2 exactly. I want to be able to scale. Maybe I'll have some at 190. Maybe I'll have some at 205 or something like that. But the general area that I want to short that stock in was $2. That was the red to green area. That was a whole dollar mark. And to me, that seemed like a great spot to at least start a little bit. So in the morning, the stock has SSR when the market opens, right? And what that means is as a short seller, you cannot short the bid, you can only short on the ask, or you can only short on an uptick. My God, it's so cold. Holy fuck, sorry. I'm starting to go crazy in this cold. But in the morning, so I told myself, all right, the stock is gonna be on SSR just in case it doesn't pop up towards two. I want to take a small piece at 190 and 191. And if it pops towards two, great, I'll add. If not, I'll just take my money and walk away. So in the morning, I set my orders 190, 191. The stock hit 193, filled my orders, and then tanked 20 cents. So here I am up 20 cents in a few minutes just because this was a low hanging fruit. It got to my levels and I made my money. And then what ended up happening is it pushed towards VWAP and I reshorted a little bit again and I covered that again. I posted my chart in MYC so you guys can all see that. So CI was a low hanging fruit that was my top watch, which is the stock that I used the most size on. So think about that for a second. The low hanging fruit, which has the highest probability of failing, is the stock that had my biggest focus and the stock that had most of my size. You should only be using size on the stocks that you have the biggest edge in, correct? Just because your max size is fucking 1,000 shares doesn't mean that you use 1,000 shares on every single setup. That's something that I had to learn as well, right? That's something that I had to learn as well. Size is a privilege. You only use it when you know that you have the biggest advantage in a stock. For me, I knew that CEI was broken. They released news that the fucking company had no idea why it's up. Longs were stuck, so it gave me every single signal that I needed to size it. And it only got to $1.90, and I was only able to make 1,500 on that specific trade. But had it gone to $2 and had I been able to size in as much as I was looking to, man, that could have easily been a $3, $4, $5,000 trade like that, right? Like that. But it didn't get there, didn't get to my levels. I only had a small piece on, so be it. MBOT was another one that I was looking at. I think I was looking at the 750 level in the morning. I put it in my watch list. Never popped, never got my entry, avoided it. TNXP is the next one that kind of came up, right? So TNXP in the morning was a stock that kind of washed out from $1.40 down to $1.20-ish, right? And to me, when I saw that happen, I told myself, all right, the stock is showing its trend pre-market. It is showing that's a downtrending stock. I want to be able to short it towards the 140 level in the morning, and I want to be able to cover at 150 and then reattack it. And what ended up happening is I ended up having like a 138 or 139 average, which is great, no problem. That's exactly my plan. But when the stock ended up breaking through 150, I gave it too much room. I told myself I want to see how 150 reacts. I want to see if it breaks or it holds. And then from there, I'll decide what I want to do. It ended up holding. And instead of cutting it off at 150 like my plan was, I cut it off 10 cents higher at 160. I created an extra 10 cents of loss for myself because I gave it too much room. And let me talk about why I gave it too much room, right? I'll talk about that. In my video watch list today, I mentioned that TNXP is the third runner that we are having, right? The first runner was TCCO. The second runner was CEI, and the third runner was TNXP. So the first runner, TCCO, is always going to be the strongest. That is going to be the head of the stake. That is going to be the stock that is always the most difficult to break down. And then after that happens, the second stock that pops up, CEI, people are going to flock to that stock because they missed TCCO. They feel like because they missed it, CEI is the next one and they have to chase it. CEI, the second stock, is never going to be as strong as the first stock. So CEI ramped up and then gave it back end of the day, right? Now you have TNXP, the third stock that is coming up, which is not going to be as strong as the second stock, which is not as strong as the first stock. So to me, TNXP is an easy short, man. It's an easy short because it's the third one. People that miss CEI are now going to jump into TNXP, and it's going to be like a domino effect. So anytime the third stock comes, that's usually one that I'm really, really, really excited about. So in the morning, I was telling myself there's probably no chance this is going to bounce. There's no chance. And although we have a thesis on a trade, what ends up mattering is the price action, right? What the hell was the stock doing, right? What was it really doing? And the truth of the matter is it was holding up, right? It was holding up. I should not have given it room to 150. I should have not seen what it was going to do. If my plan was stop at 150, you motherfuckers stop at 150. And that was my mistake today. I let my thesis cloud my sober-minded judgment plan that I made for the stock. And I paid for it. I lost a little bit of money. I can't remember how much, maybe 800 bucks, maybe 1,000 bucks. I really don't even remember how much it was. And I told myself, all right, here's what happened. I was thinking to myself, all right, CEI, you had a plan, you followed it, you made a bunch of money. TNXP, had you followed your plan, you would have just had a minor loss. Now you have a little bit of a bigger loss comparable, right? And I told myself, all right, now this is what you're going to do. You have rules. You have a plan. If your rules tell you you could only use 30% on the front side, that's what you're going to do. So when I was looking to reshort TNXP, I told myself this. I want to be shorting in the 150s with 30% of my size on the lower high with the plan to either A, cover at high of the day with my 30% of size, or B, add at 150. Hello? It's a little bit cold, right? A little bit. um, so my plan was either cover at 160 or I would add to my winner at 145. So I gave myself a level, right? I gave myself a very concrete plan. The plan was cover at high of the day or add at 145. And why did I want to add at 145? Let's do all the things that kind of got me to that point. Number one is $1.50 is a $0.50 mark, which is automatic support, automatic resistance. So 150 was automatic support, VWAP was near 150, and chart support was near 145. So I told myself that if the stock broke the $0.50 mark of 150, if it broke the VWAP level of 150 and broke the support of 145, chances are that this has a high probability of pulling back after it does that. That was the only thing that was going through my mind. It was 145 support, 150 $0.50 mark support, and VWAP. If those three things broke, I was like, how can it even rebound from that, right? How can it bounce from that? So I gave myself the plan to attack when it broke those levels. It broke 150 and almost instantly went down to 145 and then instantly went down to the 130. So here I am. I sized in. I got 10,000 shares or whatever the hell it was. I used 3,000 shares on the front side, and then I added to 10,000 shares once it confirmed. And then here I am thinking to myself, all right, the stock is at 130. What am I doing next? A inexperienced trader would say, the stock is broken. I'm just going to hold it for the rest of the day and make my money. An experienced trader says, I'm going to lock in some money so that when the stock does bounce, which most of the time it does, I will have some fresh powder to be able to attack it on that bounce and make even more money. So covered half my position at 137. The stock bounced to 140, 142. I shorted a little bit with the plan to add towards 150. Then the stock went to 120. I covered, and that was it, man. That was it. And then as the stock bounced in the 5 or 10 cent range, I played the range for 10 or 15 minutes, and that was it. So I went from losing $1,000 on the day on that stock to making, I don't know, like 1,500 bucks extra. So then I ended up being net 300 or 400 bucks, whatever the hell it was. So overall, I made 1,500 bucks on CEI, which was the low-hanging fruit, the easiest trade of the day, made the most PnL on. And then on TNXP, the day one hot chick, I paid the price of being too early, having FOMO, and losing. And the reason why I titled this video, "Why is FOMO so important?" is because had I been an inexperienced trader and been using 100% of my size on the front side, had I been inexperienced and loading, add, I would have been stopped out at 160, 170. I would have been, I would have hit my max loss on the day. And when the stock finally did turn, I would not be able to attack it because I would be locked out. So the point of the matter is that FOMO is very dangerous. And if you let FOMO control you, it will destroy your trading because I knew I knew that the stock had a high probability of pulling back. All the factors were there. But if I got myself in too early, if I blew my load too early, if I fucked up too early, when the time was right, when it was optimal, the most optimal, when the stock broke 145, I would just be sitting there with my fucking dick in my hand, not being able to do anything. And that's the point. The point is that front side is so fucking hard. But when backside hits, man, it's so easy. It's so easy. So that's why I created a 30% rule for myself. It was a way to keep myself safe. It was a way to keep myself accountable because I need to give myself a criteria that said, all right, when the stock is above VWAP, when the stock is uptrending, sure, you could get in, but you can only use 30% of your size. And what that ends up doing is, number one, you are more prone to stopping out and being okay with it if the loss is small compared to if you're in their full size. Number two is when the stock finally does turn, you get to add to your full size, which gives you the ability to actually make money the right way trading, right? Because if you're in full size on the front side, eventually the stock is going to go up and you're going to lose your ass. But if you wait till the backside, you wait for these confirmations to come and then you load up your size, that teaches you good habits for the future, right? So although today I am green, although today I'm still all right, I'm fucking pissed because I did not follow my process. Yes, I did stop out. I should have stopped out 10 cents earlier. And maybe you could think to yourself, oh, that's not a big deal. You stopped out anyway and you made your money. This creates bad habits. It creates bad habits. If you start having a fucking piece of chocolate cake if you start having a piece of chocolate cake one night, it's gonna feel so good that you're gonna want to do it every single night, right? So for me, what I recognize and what I realize is that process and routine is important. So I don't want to fucking be outside doing a recap right now. It's cold. It's fucking cold. I don't want to do this. I don't fucking want to do a recap right now. But I have to, as a punishment for myself, to remember that I have to stick to my process. I have to do what is right. And if not, I have to deal with the consequences. So there has to be a very clear reward and punishment routine in your process as well. I know that when I have a great trading day, when everything goes well, I go get a steak, I go eat cake, I get ice cream. But when I have a bad trading day, it does not matter if it's PnL wise, it matters process wise. I'm fucking going out in the cold when it's 20 degrees outside. There's snow on the ground. I have no gloves. I'm fucking freezing. I'm hungry, like this and that. So I'm torturing myself on purpose to realize that I don't want to fucking make a mistake again because I don't want to fucking come outside again at this time in this cold. Does that make sense? Ugh. Any questions, guys? Ooh. Any questions? If I'm making sense, leave like a like bar just so that I know everything is making sense. Why didn't I trade AMRX? Great question. I'm so glad you asked that. All right, so let's get into AMRX, right? AMRX was a stock that was pushing up pre-market. It was a stock, actually, there's some landscapers here. Let me try to walk past them, and then I'll talk about it so that you guys can hear it a lot clearer. 1 second. Jeez. All right, so AMRX, let's talk about why I didn't trade that. So if you look at AMRX's chart, pre-market, right? Pre-market, you'll realize that the stock was just going straight up. It had an easy to borrow. It was easy to borrow. And for those that don't know what easy to borrow is, it is a stock that there's basically infinity amounts to short. It is a stock that everyone that has a regular type of broker has access to, which means that it's likely to be crowded. When everyone is on the same side of the trade, whether it be the long side or the short side, the inverse happens. So if I see that there's plenty of shorts available on a stock that is uptrending, it is going to lead to amateur short sellers shorting in too early because they have the borrow, right? So when I saw that it was easy to borrow and it was uptrending pre-market, I told myself, bro, there's so much more easier plays out there. It's so much more easier plays. So why would I waste my time and my money shorting a stock that is difficult when I have fucking CEI and TNXP right in front of me wanting to take my money, like wanting to trade it really well? Remember, trading is about focus, right? It's about focus. If I am trading one stock at a time, it has my complete focus. If I'm looking at two stocks at a time, my focus is shifted 50-50. Now, if I'm looking at three stocks at a time, it's 33, 33, 33. At that point, is it really worth it? So for me, I focus on one stock at a time so that it has my full attention. Sometimes on busy days, I focus on two. So here I have two ideal plays and one non-ideal play, and I'm not going to even waste my time on the non-ideal play because it's not worth it. Yet I see so many people that say, I traded it because I was bored. I traded it because I lost on something. And the truth of the matter is, if you're trading random stocks after you lose, that means that you are an emotional wreck. That means that you are going to fucking lose your ass, right? That means you're going to lose your ass. If after you lose on a trade, your first instinct is to go trade whatever's moving to make back the money, let me tell you something. You better get the fuck up and walk away after you lose on your trade because you are not thinking clearly. You are thinking as a drunk person. That's what we talk about, the sober mindset, making a plan, and the drunk mindset when you're in a trade ruining that plan. So I wasn't interested in it. I don't give a fuck. My plan was to focus on the low hanger CI. My plan was to focus on TNXP because it was the third it was the third runner in the bunch. And that was it. I kept it simple, man. I kept it simple. Jeez. And here's the problem, man. Here's the problem. If you are losing more than 179 a month trading, bro, you're a fucking idiot for not at least trying it. That's how simple it is, man. That's how simple it is. Even when we raise prices to 199, MIC members are saying it's still underpriced because you are getting 4 trading DVDs for free. You're getting access to mentors who made millions of dollars. You're getting access to a community of traders who's willing to help you. But hey, man, I don't care. We're raising prices in 2020. You don't join, I don't give a fuck. Not your problem. Better if you don't join. I got no time for lazy ass people, bro. I got no fucking time for that shit. Any questions, guys? I'm walking back home because I literally physically cannot be in the cold anymore. I'm about to die. Oh, God. I'm starting to cry from the cold, man. This is insane. Questions, guys. Bring out some questions. Can you explain why inverse happens when it's too crowded on one side? Because if every single person is doing the same thing, if every single person is short the stock, short the stock, short the stock, and there's no real opposite side of the trade, shorts need to cover to exit the stock, right? There has to be, so I'll give you an example, right? I'll give you an example. On CEI, when the stock is going up, right? When the stock is going up, longs are in control of the stock. That means that shorts are stuck and longs are in control. But when the stock reverses, all those longs that bought are looking for a relief pop to sell, which is creating a wall of resistance. Resistance is created when there are longs that are trying to sell, right? When they're creating a wall, a bounce. So for me, on an ideal short setup is I want there to be so many longs stuck from higher that when the stock bounces, right? Let's say there's longs stuck at $8, the stock goes to $5. If it goes to $6 or $7, if it goes to 6 or 7, those longs that got into 8 are gonna say, I gotta get the fuck out of here, which creates a wall for us. And then as a short seller, we get in on those walls. When the stock is downtrending and has a dead cat bounce, it is just a temporary bounce on the overall downtrend of the stock. So as a short seller, we are looking to short the bounce on stocks that are downtrending. You understand? Rather than trying to find the top on stocks that are uptrending. Why don't you like to fade stocks past 10:30? Well, if you join and you watch any of our videos, literally any of them, you'll know why the zombie rule is so important. I've lost my ass for years trying to be patient after 10:30, and now we've created a strategy around even going long after 10:30. So why don't I keep holding past 10:30? Watch the fucking videos, cuz. All right, this is the last question. Can you talk about how SSR changes your plans, specifically on low-hanging fruit? Well, for me, when SSR is on, I know that I have to nail and bail, because the problem is that the stock is very easy to manipulate. It is a lot easier to manipulate a stock that is on SSR because they're able to prop the bid and prop fucking whatever they want and jam up the stock, right? Jam up the stock. So for me, whenever I see a stock is on SSR, I know that's easily able to be manipulated. So I want to nail and bail it. And I only want to use the outer lines, because if you chase a stock on SSR, you will die. All right, guys, that's it. I'm too cold. I'll see you tomorrow.